Joining us now, Bradley Tusk, an early investor in Uber and Tusk Ventures founder and CEO. Bradley, great to see you as always. Maybe we'll get to that Peloton stuff in a moment, but let's kick off with Uber. After today, do you feel like it's turned the corner, profitability, bright future ahead?
Yes and no. So I think everything Dara just said is absolutely right. People are eager to kind of get back to their normal life, to travel, to get around. That's good news for Uber. However, I think let's take a step back and ask ourselves, can Uber really be what everyone hoped it would be? Because ride sharing in and of itself is not that great of a business. The margins are low, lots of regulatory burdens and challenges. Your drivers drive for every single platform, for all your competitors, plenty of competition in the market. So if Uber is basically a ride sharing company and that's how you're trying to evaluate it, it's not the original vision for Uber. Initially, it was supposed to be kind of the Amazon of transportation, where whether you wanted to get a person or a burrito or a cargo truck from point A to point B, they were the entire supply chain. And the kind of valuations Uber had made sense based on that kind of vision. Now that Uber is a much more basic food delivery and ride-sharing company, I just think investors have to ask themselves for the long term, is this really a business that I believe in and really an industry that I believe in? And if not, at a certain point, trends aren't enough.
And so do you think it doesn't really warrant a $90 billion valuation?
No, I don't think it warrants anything close to that. Look, again, if they were really able to sort of exert control over every part of transportation and not just ride sharing, then yes, like Amazon, they could find a way to then really start squeezing out significant margins and making money. But they haven't done that yet. It's a company that's been around for 13 years, and I'm just not sure they ever will.
Bradley, I wanted to ask you, with all your expertise in technology and regulatory, given your work with Schumer and Mike Bloomberg and others, what you think is coming next for Facebook, given all these new revelations from the whistleblower? Yeah,
so look, I think that Facebook faces, no pun intended, more regulatory hurdles than almost any company I could think of. So if you think about it, they've got the threat of new privacy legislation that would really limit their ability to monetize data and sell ads. They have the threat of repeal of Section 230 of the Telecommunications Decency Act, which right now means no one can sue them for the content that's posted on the platform. If they lose that liability protection, the entire app changes. The third is Libra. They have this payment platform that requires federal approval. They have still yet to receive it. And the fourth is antitrust. And if you look at all the big tech companies that could get broken up, the kind of most obvious solution is to split Facebook up into Facebook, WhatsApp, and Instagram. And so I don't think calling it Meta really stops that problem from happening.
I wanted to ask you, Bradley, as well about Peloton and the massive decline today. Do you think that was warranted? Was it overvalued beforehand?
Yes. Look, I know that for some people, Peloton is a religious experience, but it's an exercise bike company, and there's only so valuable an exercise bike company can be. And I think part of the problem is we took valuations and share prices to a place during COVID that kind of assumed COVID would never end. And we're out of quarantine. That's why you're seeing a company like Uber have a little bit of a rebound. People like going places. They like going to the gym. They like going to meetings. And as a result, the need for everyone to have a Peloton is just much, much lower than it has been. And they're falling back to earth.
The bull case, of course, is that they have an international market to still penetrate. They built up quite a media library. I know there's two sides to every story, and clearly today was a rough day, but that it's more than just, a bike with an iPad on it, which is sort of what you're saying.
Yeah, that's fair enough. But I think sometimes, I see this as an early stage venture capitalist, you kind of come up with a vision in your head that you love for what something can be, and then ascribe the company as being able to actually accomplish that, and the valuation reflects that. And the reality is the valuations reflect what the company is actually doing in terms of revenue, in terms of cost, and in terms of realistic growth. And so I don't think that the investors today who sold were wrong to do so.